Hello, I'm Maarten Ackerman, investment strategist with Citadel Asset Management here in Cape Town. Let's quickly talk about growth prospects for the South African economy where we stand currently. I think we bombarded every day with a lot of negative sentiment, especially around the State of the Nation speech, concerns about foreign investors in our country, concerns about a lot of the policy they're talking about, land reform, nationalisation, and the immediate issue that we face on a daily basis relating to Eskom. Now, the fact is that if we look at the last quarter of 2014, economic growth in South Africa actually picked up quite a bit, coming off a very low base as a result of the strikes we had earlier in 2014. And unfortunately, what we're seeing currently is that a lot of the indicators for the first quarter of this year is not very positive. If we look at mining and manufacturing activity, it is indicating to us that economic growth going into 2015 is probably going to be weak again. And that is largely on the back of those industries struggling with the lack of capacity in terms of electricity provided through Eskom. So if you look at this year, then we do think that the economic growth environment will remain bleak. We are facing a lot of structural issues, which Eskom is only one of those. We are still facing a lot of issues in terms of the labour market, and a lot of the issues we've seen last year, unfortunately, is still on the table going into 2015. As a result of that, we do think that economic growth for this year is going to struggle to outpace about 2%, which in fact for South Africa is recession. We don't need a negative growth rate to say we're in recession, because a 2% economic growth rate for South Africa is not going to resolve our structural issues, is not going to create the number of jobs we need to resolve unemployment. If we quickly turn to the consumer typically remains under pressure. The bit of a tailwind that we've seen earlier this year as the petrol price came down on the back of the lower oil price being removed in the budget in February, where they've announced high taxes on fuel. So on the back of that, we did see a decline in inflation, short-term decline, and what we are thinking right now is that inflation is probably heading back to about 6% closer to the end of this year, and is not going to remain at these kind of low levels we're seeing currently. So as a result of potentially high inflation, weak growth environment, the current account still under severe pressure, the rand is likely to remain under pressure going into this year, and we are likely to see further interest rate hikes, although given the weak growth environment, the Reserve Bank is probably not going to be in a hurry to make any of those hikes very soon. On the back of that environment, it is still a very tough environment for the country to resolve a lot of structural issues, but yet some of our companies are doing fairly well, being global companies listed here, rand hedges, so to speak, benefiting from the global economy picking up, and then the tailwind of the weaker currency supporting their earnings base when they report back into South Africa. Until next time, goodbye.